first take on the index, down about 54 points on the Nifty.
Just down about 0.2, 0.1% on the benchmark indices.
We are seeing some amount of an intraday recovery as we speak, so we're off around 100 odd points.
For the third or the fourth day now, it's not, the market's not doing very much at all. Actually, the range is even tighter. From the high to the low point of the day, it's just a 55-point range.
For the majority of the trading session, it was quite a boring session. But otherwise, from the lows, we did see a bit of a recovery towards the end of close. Though on a closing basis, the Nifty will end closer to around that 18,350 odd mark.
Hello and welcome to Markets Today on CNBC-TV18. I'm Ekta Batra, and let's take you through the top stories that we're tracking at this hour. The markets end the day in the red after a sharp fall in the last trading hour. The sensex falls 230 points. HDFC Twins, along with Infosys, M&M and Titan, drag the Nifty lower. Nifty Bank and the mid-cap index close with cuts as well. Paytm plunges 10% after SoftBank sells 25% of its ownership in the company at 75% lower than the issue price. Sources tell CNBC-TV18 that hedge funds and long-only funds bought majority of these shares. That's the CNBC-TV18 exclusive. Tata JLR CEO Thierry Bollor's resignation on personal reasons disappoints the street. Stock recovers from the day's low but closes with cuts of 2%. Lemon Tree and Safran say homestays have hurt the hotel business in Goa, but Safran believes the hotel business has not been impacted elsewhere and homestays do not pose a serious threat. In stocks making headlines, our system zooms 15% as Blackstone is set to acquire majority stake in the tech and analytics firm for over 2,900 crores. The private equity giant also aims to delist our systems. Shriram Transport also gains 3% after the NCLT approves its amalgamation with Shriram Group. Well, here's a lineup of what we have in store for you. In market opinion, we have Tahir Badshah of Invesco Mutual Fund, and the corporate voices on the show today are Patanjali Keswani of Lemon Tree Hotels and Devendra Parulkar of Safran States. Well, straight to all the market action then. Stock market slid in the last hour of the trade today to end in the red. Prashant Nair is here with a wrap on all what took place.
By close, the market did come off quite a bit, and the index finally settling just above the 18,300 level. We've seen this for the last many days. The market does nothing for the bulk of the session, and then there's a move in the last hour, sometimes up, sometimes down. We've seen both sides, and today it was down. Bank Nifty also came off, although the cut was more limited, just under 0.25% or so. What was down, apart from banks, sectors like autos, IT and consumer, which sold off. PSU banks, perhaps the only large sector which ended higher in the green. Large cap losses, and HDFC and HDFC Bank both were responsible for the last 30 minutes of sell-off, both contributing about 30 index points to the Nifty sell-off. There was Mahindra & Mahindra, Titan and Tata Motors, which also gave up gains. Large cap gainers included Tata Consumer, Adani Enterprises and L&T. But you just had these three names with gains in excess of 1%. Almost 35 out of the 50 names ended in the red. Broader markets, no reprieve, more declines than advances, and this has been a trend for the last many sessions now. Cuts coming through, large ones in Paytm, backed by volumes. There was Info Edge, which is Naukri. Nazara was down, so these are essentially new age recent businesses. RVNL took a turn down. It's done phenomenally well. Adani Transmission, Piramal Pharma were some of the others which lost in trade. Gains coming through in names like Timken, which was limit up, Union Bank and EIL were some of the other gainers. For the last few sessions, the market has been hesitating. It's been very close to all-time highs. It's a matter of time before we cross those. But perhaps fear of heights, the market has been hesitating. And today, there was a bit of a decisive move lower in the last 30 to 45 minutes of trade. Back to you.
Okay, all right, Prashant. Thanks very much for that. Well, on to some expert opinion now. Tahir Badshah, CIO, Equities at Invesco Mutual Fund, said it has been a decent earnings season, but added that he didn't expect any significant upgrades from here on. On the banking space, he said that banks can do well if credit growth maintains momentum.
Earnings expectations have actually perhaps not been kind of beaten in this particular quarter's earnings. I think we've just about managed to clear the finishing line, and probably we've seen a marginal upgrade as far as the large caps or the Nifty kind of earnings is concerned, probably helped by some of the larger banks, if at all. But broadly, the entire mid and small cap space on an average seems to have probably somewhat disappointed compared to what the expectations were at the start of the season. I think it's been a decent result season, but it's not necessarily led to a scenario where we would probably hope for significant upgrades from here on. Banks are still one place where probably you might still argue for a little bit of upside, and particularly maybe some upgrades in terms of earnings as well. Going forward, if let's say credit growth continues to maintain its momentum. There is, of course, on the other hand, the flip side is that we need to see deposit growth also catch up, and we need to probably focus more on the banks who can manage the overall liability situation, the liquidity situation much better than some others. So I think we need to make our choices within that space. But in general, I think that is one of the sectors where top line probably can still deliver some positive surprises. We saw some of that even evidenced in the last quarter's earnings. So I think that is still a sector where we can probably stay a lot more constructive.
Okay, well, on to the second headline now. Paytm plunged 10% after SoftBank sold around 25% of its ownership in the company at 75% lower than the issue price. Sources tell CNBC-TV18 that the hedge funds and long-only funds bought majority of these shares. Nisha Podar is here with the exclusive details on this large trade.
Thanks for that. Yes, sources with direct knowledge have shared with us that SoftBank, which is a large investor in Paytm, has sold down 25% of its holding in Paytm with the block trade that was executed right after the pre-IPO investors' lock-in period for Paytm ends 1 year after their listing, and they've sold close to 5% stake, and remaining 13% stake is still with them. So the entire trade was worth about 1,800 odd crore rupees, and that's what SoftBank has taken away, with 555 to 560 rupees per share average selling price. Now take a look at it into perspective. Now 13% odd stake which remains with SoftBank cannot be sold for 60-day period as per SEBI norms. It has a lock-in period, and therefore that particular overhang does not stay with Paytm, but there are other investors who may be also looking at selling down. On the other hand, 830 rupees is what they had bought this at, so it's a huge loss at which SoftBank has really exited a part of its holding in Paytm. And when it comes to the investors, the top 5 investors that include Norges Bank, Gazalo, as well as Millennium and some of the others, these are the top 5 investors which are long-only funds, crossover funds, which have bought the majority of the book which was on offer. And remember that from a $20 billion equity valuation at which Paytm had listed just 1 year back, the shares have been sold at $4 billion valuation. So the new investors are looking at an upside from here on, and also looking at the execution capabilities of the founder, VSS, of Paytm.
Okay, all right, Nisha, thanks very much for that. Well, on to the third story this evening then. Tata Motors stock fell after the JLR CEO, Thierry Bollor's resignation on personal reasons has disappointed the street. This comes within 2 years of Bollor taking over the task of turning the brand around. The stock recovered from the day's low but closed with cuts of around 2% odd. Sonia Shenoy is here with the details.
This is a big disappointment coming in for Tata Motors, because the CEO of JLR has resigned at a time when Tata Motors was undergoing a transformation phase, especially for the JLR business. It also comes at a time when the JLR business is struggling a bit given the challenging macro environment. So as you rightly pointed out, the CEO, Thierry Bollor, has resigned with effect from December of this year. He was the CEO from 2020. So for the last 2 years, he was very instrumental in the transformational journey of Jaguar Land Rover. Now, Adrian Mardell will be taking over as the interim CEO of JLR. And as I said earlier, JLR is going through some problems at the moment, whether it's the weakness in earnings, where the EBIT margins in this quarter had gone down about 230 basis points quarter on quarter. There's a negative free cash flow that the company reported, citing adverse working capital environment. Given all of this, the resignation of the CEO and no clarity on who the new CEO will be is something that is spooking the street. Not just that, the stock has already underperformed the market market quite a bit. It's down 15% this year, and hence all eyes will now be on when the new CEO will be appointed and who it will be. Up until then, there could be some uncertainty on the stock. Back to you.
Okay, all right, Sonia, thanks very much for that. So that was on Tata Motors. It recovered from the day's low. But moving on to a CNBC TV18 exclusive in the insurance space. Insurance regulator IRDA is likely to hold its board meet next week. Sources say that expenses of management limit and reinsurance regulations, amongst other norms, will be discussed at the meeting. Yash Jain is standing by with the details on this. Yash.
Well, that's correct. November 25th it will be an important day. The insurance regulator will be conducting its board meeting. The Insurance Advisory Committee has essentially approved and proposed 11 points for the regulator to take it forward in its board meeting, consider and hopefully come out with a decision on some of these points. I've picked out 4 important points out of these points notified by the Insurance Advisory Committee, and these are the points which the insurance regulator would be discussing. The first one is on expenses of management limit, the second one on open architecture for distribution, third one reinsurance regulations, and fourth one registration of insurance companies. I'll quickly take you through these 4 points and what they mean. Expenses of management limit, the first one, what the regulator would be discussing in its board meeting would be to put a limit when it comes to expenses of management of all 3 life, general and standalone health insurance companies. Now, expenses of management is nothing but a total of the commissions which insurance companies pay plus the direct expenses. A limit is something that we can expect from this particular board meeting on these expenses of management. Second one, open architecture for distribution. The insurance regulator may discuss and approve allowing banks to tie up with 9 life, 9 general and 9 standalone health insurance companies for their distribution. This number currently stands at 3. The third one is reinsurance regulations, and there it could be a bit of negative for GICRE, the listed company. That's because the insurance regulator looks to amend the right of first refusal or the order of preference in the insurance sector, essentially giving foreign reinsurance branches or FRBs, bringing them on par with GICRE when it comes to priority in getting contracts. The fourth one, registration of insurance companies, a series of amendments here. Amendments relaxing entry and lock-in conditions of private equity investors, increasing threshold for promoter classification to 25% from 10%, and finally, amendments for lock-in period for investors and insurance companies.
Okay, all right, Yash, but stay with us. Market regulator SEBI has proposed to revamp the entire share buyback process in a consultation paper that was floated by the regulatory body. It has proposed changes around the maximum limit, quantum, and the time taken to complete buybacks as well. Yash, continue. Give us more perspective on this, the highlights.
Well, this is a very important proposal coming from a committee which was appointed by market regulator SEBI. The committee has proposed amendments and changes on every aspect of the current buyback mechanism from top to bottom. As far as the proposal which has come on open market buyback, there are 4 important points. One is the maximum limit. The maximum limit for open offer buyback has been proposed to be reduced to about 10% from April 2023 and 5% from April 2024. Currently, this limit is about 15%. The reason is clear: to avoid possibility of one shareholder matching the entire order coming from another shareholder, and essentially apart from that one shareholder, other shareholders being deprived of to participate in this particular buyback. Time period, that's the second part. The time period has been proposed to be cut to 66 days from April 2023 and 22 days from April 2024. This is the time period between the start and end of the buyback. The current time period is 6 months. The reason is clear: to essentially avoid any artificial demand for the shares of a particular company through an extended period of time. Minimum amount to be utilized. The 75% of the amount earmarked for a buyback has to be utilized according to the proposal from this company. Currently, this amount is 50%. Eligibility, the committee has proposed that open market buybacks via stock exchanges should only be available to companies which are frequently traded. Restrictions on volume and price. In any particular day, the company which is actually doing the buyback cannot purchase more than 25% of the average daily volume of the previous 10 days before the buyback date of announcement. Finally, there are also certain amendments made on the tender route for buyback. Various of them, including price can be raised and number of shares can be cut till 1 day before the buyback announcement. Company now needs to submit 2.5% of earmarked amount in an escrow account versus 1% currently. In a tender offer, the maximum limit can be 40% of the paid up capital and free reserves versus 25% currently.
Okay, all right, Yash, thanks very much for that. Well, it's not just buyback. SEBI is also framing rules for social media influencers who are doling out financial advice. Archana Solanki is here with more. Archana.
Thank you for that. It's a very important piece of news for our viewers, because how many times do you open your Twitter, Facebook or Instagram account and get unsolicited stock market advice? Now, some person on your mobile phone screen is using simple language, your language, breaking down the difficult market jargon and telling you where to put your hard-earned money in the stock market. I'm sure the answer is yes. Now, the big update is that market regulator SEBI is working on framing guidelines to govern these influencers. Now, this comes after SEBI witnessed an exponential rise in the number of various unregistered investment advisors giving these social media tips online and on platforms which are very popular like Telegram, Facebook, YouTube, WhatsApp, Instagram. Now, you may ask, what are these guidelines and why are they needed? The question is, why are they needed? What is the regulation for? Now, there's a lot of ambiguity over these influencers' credibility, their license and qualification. Now, according to reports, the impact of their advice has been detrimental at times, leading to many people losing their precious money. Moreover, there have been instances of influencers allegedly being paid by companies to endorse their stocks without any disclaimers. Now, for our viewers, it's important to note that SEBI's rule require financial advisors to register themselves or issue disclaimers. There are about 1,300 registered advisors in India. Now, data from the Advertising Standard Council of India shows that in FY22, there were 415 instances of violations by influencers and celebrities in finance and crypto-related content. Now, these statistics and recent trends have once again brought the spotlight on financial influencers and why regulation is the need of the hour. Back to you.
Okay, all right. Thanks very much for that, Archana. Well, time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories. Welcome back. You're still tuned into Markets Today on CNBC-TV18. Let's get to the rest of the stories that we're tracking for you. Well, on to the next headline. Homestay has impacted Goa's hotel business. That's the word coming in from Patanjali Keswani of Lemon Tree Hotels, who says that hotel prices are up by 20% over pre-COVID periods. On the other hand, Devendra Parulkar of Saffron Stays says that homestays have not impacted hotel businesses across cities other than Goa.
November and December is looking fantastic from every perspective, whether it's the wedding season you talked about or general business demand. So I definitely see in H2, we will exceed what H2 was in the last normal year pre-COVID, which was, I think the occupancy was about 70%, 71%. I think it'll cross that. So that's the good news. And prices, of course, are at least 20% up over pre-COVID. Homestays have affected us in specific markets like Goa. But on an aggregate basis across, we are in 52 cities. They have not really materially moved the needle. But Goa, I can definitely see the impact, not only for us, but for hotels in general.
This is a misnomer that the homestays are eating into the hotel industry's market. I think there's enough and more space for everybody. The demand and the structural changes that have happened in the demand are so positive for the entire industry. And the buoyancy of that demand is so, so heartwarming that I don't think any of the segments should be worried. We've not seen a fantastic November. And we were surprised by that. Post Diwali, we actually saw a small dip. But the month of December has been a surprising packet.
Okay, well, on to the fifth headline today. Then our system zoomed 15% in trade as Blackstone is set to acquire majority stake in the tech and analytics firm for over 2,900 crores. The private equity giant also aims to delist our systems. Reema Tendulkar is here with the fine print.
Thanks so much for that. So Blackstone, the PE firm, has acquired the promoter holding in our systems. The promoters hold about a 52% stake, and that has been acquired by Blackstone, which means that Blackstone is now the promoter of our systems with a 52% stake. But the company Blackstone wants to delist the company, which is why they are making an open offer to acquire the balance 48% stake. That will be done at a base price of 246 rupees. So Blackstone wants to get that 100% stake and delist the company, but the minimum that they require is a 90%. But currently, the stock market, the current market price of our systems is higher than the base price which has been offered by Blackstone for delisting, which is 246. Now, successful delisting of our system pretty much boils down to one investor, and that is Bhavuk Tripathi. So Bhavuk Tripathi is an investor. He has about a 35.5% stake in the company, plus he has some investments via his portfolio companies. So on the whole, he has about 37% stake out of the 48% that Blackstone wants to acquire, and his holding now stands at 1,200 rupees per share. Perhaps what the market is sussing out that this delisting is not going to be successful at the current price that the promoters want, and the actual discovered price through that whole process will be significantly higher, maybe like we saw in the case of Linde India. Now, our systems is a product engineering company, something similar to, say, a Persistent, but of course much smaller in size. Now, our systems has done well as a stock price. The last 3-year returns, excluding today's gains, right, just till yesterday was about 350%. The 5-year returns till yesterday were 463%. Another, so Blackstone is big on IT in India. They have various, investments in unlisted companies, but in the listed space, they have an investment in Mphasis. But our systems is a much smaller company. It's a product company, while Mphasis is an IT services company. And when we quiz the management that do you think Blackstone would be interested in perhaps, trying to get some synergies by merging the two, the indication seems that unlikely. But where our systems can benefit perhaps is that they could get business, or they could get orders from many of the Blackstone portfolio companies like Mphasis does. So that could be a synergy play that Blackstone and our systems together can work out.
The rationale is that we have reached a point and we need a big partner who can take care of the company and take us to the next level of its growth and take care of its employees, customers, and partners. Blackstone is a great partner. They are very good, employee-friendly with their other portfolio companies, and that's why we wanted to partner with them.
Okay, so that's our systems, one of the big mid-cap movers today. But sticking with stocks which are making news, Shriram Transport also clocked gains of around 3% after the NCLT approved its amalgamation with Shriram Group. Abhishek Kothari is here with the details on this story. Abhishek.
NCLT has approved the scheme of amalgamation and arrangement between the Shriram Group. So this NCLT order was given to them as of 14th of November. So the company has fixed 30th November 2022 as the record date. This is to determine the fact that how many shares of Shriram Transport Finance will be given to the shareholders of Shriram City Union Finance as well as Shriram Capital. As per the merger terms, we already know that, for every 100 share of Shriram City Union Finance, shareholders will receive about 155 shares of Shriram Transport Finance. Back to you.
Okay, all right, Abhishek. Thanks very much for that. And with that, it's also a wrap on this edition of Markets Today. Thanks very much for watching.